Getting cattle out of the way. Cattle on feed was out Friday. Main thing we looked at was placement, so the number of new calves and feeders that go into feedlots. As you can point out, seasonally, with all the fall calf sales that go on, we do have a large influx of placements during the fall, and the latest number here was 3% higher for this month of September. Keep in mind, these numbers will be marketed, so they'll be done from feedlots. You're looking at the spring. We're running from March through June mostly here. So just look at this general trend. Last few months, we've got some higher for May. We've got some higher again in August and September. We are going to have some higher slaughters running with us through March or so at least. So keep in mind from a supply perspective, this is a little bearish. You can argue, you can make that point here. One thing I will point out is last week we got a chart of cash cattle prices. This goes back for the past 10 years or so, since 2000. Just want to point out that the general trend, the past few years at least, is up. In fact, last week, we put in the highest trade we've had since, heck, 2003. Why the heck is this? We've got some bearish information. Why are we kind of bypassing some of this information? As far as a little clarification on the chart, just want to point out in 2003, in May, we had Canada had a case of BSE, and we stopped taking their calves and feeders. That means we had a supply tightening for the few months, and surprisingly, at the end of the year, we had BSE here in the U.S., so our exports fell sharply. But other than that factor, just look at this here rebound we've had since 2008, 2009 with the economy hurting beef, but right now we're right back up hitting new highs here for the past few years. Why is that? Well, here's a chart showing beef supply for the past few years. So in the beef world here, we produce beef in the U.S., we import a whole bunch of it, and we export some of it. We're net importers of beef still here in the U.S. But what I've got here is a chart showing the supply of beef that's left here in the U.S. And I want to make the point here that kind of stabilized in terms of beef production from the U.S., but since we're exporting so much, all these big bars of net imports are now down to very, very small levels. In fact, for beef supply, you've got to go back, this is, I believe, back to 1998. So the tightest beef supply since 1998 here in the U.S. That's pretty darn exciting. So while we may not quite have the U.S. consumer back in terms of the demand side, at least for supply, we have some very tight numbers. And this is why I like this whole idea of we need to be bullish right now on beef in the big picture, and especially maybe into 2011, once we can hope that the U.S. consumer will slowly come back into this market. So tightest beef supply since 1998. Keep that point in mind here. So with that in mind, we still have this upside objective, 108 in the April. We got up to 105 or so and some change last week or so. We still think 108 in the big picture. We will buy this pullback that's going on the cattle. We're trying to look maybe on the 103 for a buy point on the February contract. For the hogs, I'm just going to have one chart here showing this cold storage report. So on Friday, we also had a chart showing, or a report showing how many stocks of pork are left in the U.S. Main point here for the pork side, we had a big surprise. We had a big jump, larger than usual, show up in this total pork number. So it's kind of confusing because we had 6% lower hogs available at the same time that we increased stocks. Something screwy happened. We saw it on the export side, so we'll have to wait to see what those numbers actually show here next month. But main point for pork, we've been in a downtrend for a few weeks. We expected some stability to show up this week, but with this cold storage report, maybe we'll have to put that off